up traders? What up investors? Ken here from Dyslexic Investor, and we're going to be doing a slightly different video today. Again, we're going to have the normal content of what happened in the market today, video coming out a little bit later, but we were going to be looking at a Wall Street bet DD, which is a due diligence report, which kind of has gone somewhat unnoticed. And I think it did, the individual did a fantastic job highlighting some very key underlying points within this particular business model and this particular stock's value. Not saying that the company's going to zero and we hope all the employees lose their jobs, all this kind of scenario where people always look at this, but this is a somewhat of a short report in the sense on looking at Dash. So bears are potentially, again, the bear, which is this little guy here, which you're seeing here with the overall market kind of come back here. Looking at the fundamentals and how the fundamentals don't really line up with the current stock price. Understandingly, again, Dash is a technology-based company that helps individuals, consumers, get food from their local areas to them via transportation, and at the same time getting advertising to the C individuals of the restaurant to kind of promote their business and so forth. Anyways, so let's get some disclaimers out of the way. My name is Ken. I love stocks. And third note, actually, I am not a financial advisor. So take all this as entertainment sense, and please do your own due diligence or contact a true professional on doing any other your financial activities here. So if you check that box, hit that like button that you understood the rules and regulations going forth here. And I need to put up my special slideshow. The speculative trade. What are we talking about? Of course, we're talking about Dash. We talked about it about a week ago, but with this overall market, it's just continued to grind lower. It's been somewhat on my watch list. If you don't know, your boy Ken here used to be a closet bear, which basically means my senses tingle when I see these kind of various opportunities. It has come down quite a bit already. It's actually getting to the low point of its stock career here at Dash. Without further ado, I hope everyone understands this is a speculative trade. This is not where I'm throwing a YOLO amount of my account into it. It is less than 1% of the account. I'm just kind of dabbling to kind of get my hands wet to kind of understand this business model a little bit more, which I don't want to hurt anyone on their wages or anything like that. This is just clearly looking at the stock, okay? So I see you typing right now in the comment section, oh, this son of a bitch doesn't know what he's talking about. He wants the stock to go to zero so everyone loses their job. No. I think there's a reasonable price for the stock. Don't get me wrong. I think it's just a little frothy and it needs to come down a little bit. I don't do these videos very often here. I do, again, my closet bear doesn't come out very much. The last time it came out, which it's been some time, which I did get a little bit of a ripping on, was a report on oil transportation stocks way back and when we had the oil crisis, in the sense of people going complete apes on the sense of like, where are we going to store all the oil? The oil prices are crashing. No one's using the oil, blah, 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 blah. And everyone's like, oh, the oil shipment companies are going to making so much money. And I said, no, they're not, because I've seen that, done that before. I've seen the pattern. It continues to play out each time oil comes crushing down and we have a shortage of supply. Okay, I'm going off a complete tangent here, so let's just stop here. Let's just go into the main screen here and have some fun. So looking here on the report here from Wall Street Bets, highlighting here, okay, he also discloses young bull gang autistic. I'm going to say he's not a financial planner, blah, blah, blah. We all know that. DoorDAsh. So there's a food delivery company business that works to give its customers and merchants, aka the businesses, avenues to stop and shop place for orders, to receive orders, and make other revenue business. So, of course, during the pandemic, which everyone's been sitting at home, I want my pizza from down the street. I can potentially use DoorDash instead of getting my fat butt in the car and driving there and getting it myself. But that's fine, whatever. I can get that food delivered to my house. But at the same time, I get charged a delivery fee, pay the tip to the fantastic individual who brought it to me, And then at the same time, they're taking some of the cha-ching, cha-ching, a little bit of cheddar off the top. You don't put cheddar on cheese, but a little bit, you don't put cheddar on top of pizza, but a little bit of that cheese off the business, taking basically a commission for that sale. And the guy does a fantastic job going through here. So we're just kind of gonna peruse through it. I'll link this down in the description below. So basically, first revenue stream is collecting through fees charges to the customers to bring to the place. Check. Second revenue stream is from the commission the DoorDash takes from every order that is paid by the restaurant. So DoorDash commissions on restaurant orders are about 20%. Okay, per order, which is among the highest in the industry. Uh, Grubhub and is a consistently around 13 ish percent. And then the final revenue stream is advertising. Of course, if you want your business higher in the queue, you pay DoorDash a little bit of cheddar. Again, I'm cost always. I love cheddar cheese. Again, I love cheddar cheese. But okay, that's fantastic. We understand that, right? So financial stuff. Okay, DoorDash IPO came out. We're going to be looking here in that in a second here. Some of the negative aspects coming in through here. They lose money. Of course, due to the pandemic, it had a huge boost in its earnings. In fact, because of the, again, stay-at-home economy that we had, a lot of people didn't go out. People wanted their favorite pizza, burger, whatever, delivered to their door, willing to pay a little bit of extra charge. They're talking about here issuing some shares. Again, the lockup date is coming up from 90 days after December 9th. So that kind of puts it, would it be an April timeframe of this lockup date coming out? Which again, lockup dates are basically earlier investors or employees of the company are able to bring their shares. If they last year they got a bonus, they got a 2% raise, and then they got 1,000 shares in the company or whatever, how they gave these shares out to their employees or whoever, have the opportunity to take those shares and sell in the open market. That's basically what a lockup date is. In the conclusion of this guy makes a pretty good idea here. Basically, with DoorDash charging at such a high price and not really creating a moat around its business. Again, what we talk about, what's a moat? A moat is basically that wonderful little thing around a castle, which again, Warren Buffett loves, and talking like, what's the moat in the business? Their moat is basically just trying to get the industry on using all their technology to advertise and platform. But again, we know Grubhub, Uber Eats have this, it's a very hard market to kind of get into. I mean, a very easy market to get into and really hard to build that moat because it's really just going to be a drive to the bottom line on who's willing to take more, less of a cut and just squeezing pennies as much as you can. That's my opinion again. Of course, he talked about the DoorDash stop paying $5 million to advertise, donating $1 million. So basically, the statement there is DoorDash paid $5 million to advertise that they donated $1 million. So I find that kind of funny. So conclusion here, he has positions. He says he's actually doing, my current positions are 14 call spreads. So call spread is basically you're selling a call and buying a call higher above it on creating a little bit of premium. So he's selling the 85 March, and then he has a 160 put in May 2016 and 140 puts on May 2021. So we'll look at those as well. Again, this is his statement is he's not bullish, he's bearish on the company because he's wanting the stock to kind of come down here. So basically, let's just read the conclusion. More major selling pressures upon the release of shares after lockup will at least forehold the increase of shares that will be transmissible to the float, blah, 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 blah. If the lockup will not occur, that means that below the 127 price have already maxed profit reached the spreads. Again, this is talking to what the lockup prices are going to be projecting as on the statement above. And then he actually cited his sources, so he did a fantastic job on that. And then we're going to Citrion. Yay, Citrion. Looking for basically Citrion to, again, they're no longer releasing short reports, as I said. That was late last year, I believe. This one came out December 17th, 2020, and it's actually somewhat in line here, and it kind of breaks it down just a slightly better here with DoorDash highlighting their price target at $40, okay? Really looking here is Yeah, for DoorDash is really valued at $50 billion. Yeah, it's pretty insane, right? And then you kind of see here, just 5 months ago, Postmates is acquired for 2.65 million, an all-stock deal for 4x sales. 4x sales meaning 4 times its sales revenue or sales in total, not profit in that sense. Just their sales is what the market was valuing it. So 4 times sales. DoorDash is 19 times sales. And the other averages, sales multipliers on Postmates, Grubhub, and Uber are basically in the consensus of 5. And they do this fantastic math on Citrion because we don't know on how to do math here. So looking at some of the expenses here, this is what we talked about here. The race to the bottom has begun, meaning that whole moat thing. There isn't really a hard. The only thing I potentially can see is building customer loyalty, and in the sense of just like, hey, I prefer to use DoorDash because of Uber, but Uber Eats because but the thing is, like, I signed up for a DoorDash account. I signed up for this thing. They literally give you like 50, 60 free dollars to use with no fees going to potentially get you hooked into that potential model. From my experiences, I don't feel like that's the best note to potentially see to go lower here. Um, that being said, here, this is from the Panera Bread noted Panera Bread CEO, which I think is not the founder, but he's a very smart individual. Says DoorDash, Grubhub, and Uber Eats have a tough business for them. It's a very competitive, and I think the business model is hard. Lack of words, lack of transparency, but let's just kind of annotate that as the business model kind of sucks. You're really again competing to the bottom line. Again, no, I'm not trying to diss the company. This is the business model compared to the stock price. So, without further ado, let's kind of go look at the stock price itself. So, as you can see here, today it is down nearly 8.5% here, which you can see here on the top corner up here. Ever since the earnings call that we saw has been really going down. Again, this was a newer IPO stock that came out this mid of December last year. Ever since it came out, it made that kind of like a bathtub movement here, and then kind of got lit on fire, kind of held where the IPO initially came out, and then it had a pump higher, and then just a drop in shares. Really just kind of recapping that, doing my John Madden on the screen here. Looking for potentially where we could be going. We can do some very basic Fibonacci analysis here. So we're going to be doing some Fibonacci extensions from the swing high to swing low to swing high again. And we're coming in, breaking past that 158, which we potentially were looking at, where I saw it break going into after earnings. Since then, we have broken it as well here, and the downtrend is intact still. So what we mean by the downtrend is looking here at potentially seeing the 5 and 8 moving averages. So that's the pink and white line continuously to drive this lower here. And we're not able to really stay above that 5 EMA that's continuously falling ever since basically that switch when we had the 5 and 8 cross through the 21 EMA. This happens quite a bit with an IPO stock. So again, if DoorDash can figure things out and other companies fall under, and DoorDash is the lead hero in the story, maybe 5 years they can turn around things around and so forth. Fantastic for them. As of right now, in this moment in time, I think it's slightly overvalued here. So that's why my consensus is that I am selling premium in it as well, and as well buying some puts. I want to thank an individual from the Discord. Again, we love our Discord. So if you haven't joined already, please hit the description down below here. It came from INT64. He posted the link again. I've talked about getting into DoorDash as a short position for some time, but he did a fantastic job on helping me create some of these links and so forth. At the same time, that low that we're seeing here at 135, can it potentially go lower? Yes, I think it can go lower. Will it? I don't know. I'm looking at this momentum to continue to potentially play out. So the path of least resistance is going to be to continue to try to go in this trend here, going lower here. being a conservative trend follower. So I need to see it continue to stay at least below the 8 EMA for my thesis to work out. If it really wants to have a pop, it has some fantastic news or whatsoever, it can maybe run up to 170 here, to again the falling 21 EMA. But if it starts breaking the 21 EMA, that could be a trend change and reversal here. And at the same time, if this wants to potentially build a base here around the 150 to 135 level where it's currently kind of trading at, I know it's a pretty broad range here, but we could see some chop coming in here before we get that little lockup date to kind of come through, and we could maybe see that flush lower. Who knows? I don't have a predicting crystal ball to tell me where we could see things going, but that is something I want to be very mindful about on really playing the sense of, okay, not just the playing the reopening and potentially losing a lot of delivery potential businesses here. And then more restaurants are going to be opening up their capacities, meaning, hey, I don't have to order anymore. I can just go to my favorite restaurant, uh, so forth, depending on the standards and protocols that are in your state. In Texas, Louisiana, just you can do what you want, basically. But and the same note of this being mindful of like, hey, it's great IPO. It came kind of later in the stage of the IPO run that we're seeing here. So normally I like to skew those later IPOs of more of like a C kind of out of the grade from A, B, C, D, F, like a C to low grade dash. Because again, it's not like a Palantir or a space kind of company that's kind of fraud, like not fraudulent, but it's basically kind of tipping the frontier here. This is a very, very, very competitive business, and it really just takes a very great moat to build around this this practice to really see if this would really come through. So again, looking this at strictly the stock, okay, the stock valuation here. I don't want the business to fail. I just think the stock has got ahead of itself. I think that the stock has been a little frothy. Again, we can go through these examples left and right here. So we talked about snow, right? Snow, first day popped up to 320 and just did next to nothing. And now it's breaking past its lower band here. Everyone, Warren Buffett's in it, Mark Benioff, all these smart investors and everything, like, hey, it's a great company, but no one is like, it's a great enterprise company. They do fantastic stuff, blah, 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 blah. But the stock price was just overvalued. The company does great things. It's growing, sure. It's reinvesting things, wonderful, but it's not doing next to anything in the sense of the stock price. It's just a little overvalued. It moves quite a bit here. And at the same time, it's in a downward trend. We're trading the stock, not trying to make the company fail here, ladies and gentlemen. So I want to be very clear on that. Again, very speculative trade. So be mindful about that. And I want to thank everyone who came out and watched to this point here. I know it's a little bit of a longer gated video here. I want to thank everyone from the bottom of my heart. Please don't forget to hit the like and subscribe on the way out the door, and I'll catch you guys on the flip side. Peace.